Hey guys, first let's look at the strategy. So this opening range breakout is a very famous strategy. I found this strategy in internet. For example, if we see and search for opening range breakout, we see a lot of strategies. So the basic outline for this strategy is simple. First candle, which is at 9:15, we mark high and the low of the candle. And if high breaks, we buy it. If low breaks, we sell it. So that is the strategy idea. So I took the strategy and then saw on Bank Nifty. So on 15th June, we can see this is the range. Let me add session breaks. So once I add session breaks, we can see this is the intraday time frame. So this is the first 15 minutes candle. So I'm going to mark high of the candle. So this is the high of the candle. So the color I am changing it to green, and I am also going to mark the low of the candle, and I am setting a color red. So if any candle breaks this high, then we will buy, otherwise we will sell. So in this case, at around 11:15, we can see that there is a red candle which is breaking this low. So we basically sell at this level. The low of the first candle is the low of the first candle is 43,840.95. So we are selling at 43,840.95. And if you see whole day the market was falling, and then finally at 3:15 we close our trade. So the opening price at 3:15 is 43,410. So we make a profit of 430 points in this particular trade. So that means that strategy is working. So there is a good amount of confidence. So if we look at 430 points and then lot size is 25. So we made around 10,000 rupees in this particular trade. And margin is typically right now, if I check the margin required is 1,46,000. So 10,000 profit on 1,46,000 will give us 7% profit. So we are basically making 7% profit in a single day using this strategy. So I thought of checking this strategy on few more days whether it is working fine or not. Some days it is breaking it and then coming down. So we can see the SL is getting hit. So in this strategy the SL is other side. So manually it takes a lot of time to check for this strategy whether it is working or not. So that's why I have quickly downloaded this data using Zerodha API, and I have written Python code. Basically to read the data, and these are all the variables. So I am starting this backtest from 2015 and it is till 2023 April, and I am taking till 9:30 the ORB candle, and I want to close the trade at 320. So SL I am keeping is 1 times of this range, and target I am keeping open. So if either SL should hit or it should be 320, then only it will exit the trade. So after that I have written entire code to basically code the same logic that we have discussed. And then when I executed this code, this is the trade log that it produced. And then I processed the data in Excel file. So this is the data that the code generated. What is the entry type, time, entry price, exit price, and then what is the SL range. So this data I have pasted in one Excel where I processed this data. So this is the data that we have seen just now, and I have performed a lot of calculations to come up with these statistics. So in this case I have considered 2 lakhs, and then I am considering one lot, and then one lot quantity is 25. So basically with all this, and the start date from my backtesting is 2015 February, end date is 2023 April. So as you can see the returns are 352%, which is decent. And average annual returns, if you see, it is 39%. So basically, on an average, we are making 40% with this strategy. And if we there is a special way we can calculate compounded annual growth rate, which is nothing but CAGR. So in mutual funds, typically we assume this as 12%. So here we are getting 25%, but this is after 30% tax. So I am already considering the tax. Most of the people don't consider this when calculating backtest statistics. But the key point here is the drawdown, which is minus 48%. So I'll tell you in a moment what is drawdown is. But looking at this graphs, so you might think it's a good strategy to trade. And also, if you look at yearly returns, every year is almost positive, except the current year. It is still running year, so it might end up positive also. And these are the month-wise returns. So we are negative on few months, but positive on few months. So you might think it's a good strategy to trade. And also, if you see, consider compounding. So if you start with 2 lakhs, in these 9 years, the 2 lakhs might become 29 lakhs if we compound it yearly. And if we consider tax into it, then it becomes 14 lakhs. So it's a decent strategy, but most people stop at this point of time and tell you that this strategy is very good. But the two important factors whenever we are deciding whether strategy is good is not. One is the maximum drawdown. Here it is 48%. So what is this maximum drawdown? Here you can see, here we have reached the top, and then till here we didn't cross this top. So all this time we were in drawdown, and we basically lost around 50% of our portfolio at this point of time. You can see it was 350% and it dropped to 300%. So that means we lost around 50% of the capital. That means if you had 2 lakhs at this point of time, it would have become 1 lakh only. So we already lost 1 lakh. So whether can you take that 1 lakh loss or not, it depends on your particular risk profile. So you can only decide whether to make 40% annual return. Can we take risk of 48%? So that means on 2 lakhs, if you are making 80,000, there is a risk of 1 lakh. So that is the meaning of this. So that is one side of it. So personally, I would not trade this with this much drawdown because it psychologically is it is not good. So as much as you may think from backtest, but in reality, it will be very different. You will not be able to take this much loss. For example, if I increase the capital to 4 lakhs, then all these calculations will get updated. Now you can see we are making only return of 20% because now our capital is 4 lakhs instead of 2 lakhs for single lot, but our drawdown is 24%. Now some people may think, okay, let me make 20%, which is still a good return compared to mutual funds. And 24% drawdown is not bad, so they may think this is a good strategy and they may go ahead and trade. But two more important factors to consider is one is slippage and second one is charges. So if I add charges to this, which is basically all the charges that typically we pay, uh, transaction charges, GST, STT, SEBI fee, stamp charges, and total charges. So all of them I have considered. So here, if I want to consider charges, then you can see the return is only 13%, and we made already two loss years because we have considered charges right now. So most of the people don't do this way, and they end up losing money when they make it live using the same strategy. And I have considered here brokerage is zero, but if you trade with Zerodha, there will be a brokerage of 20 rupees per lot. So if I consider that as well, then returns are only 7%, which is very low. And we can see now still 2 years we are making loss. And another important factor is slippage. So what is this slippage? Slippage is nothing but when you place an order at 100 rupees, you may not get order fill at 100 rupees, you may get order fill at 101 rupees. So this slippage is basically considering that. So assuming that let's say if I take any trade on April 28th. So the entry price is 42,875. This is the ideal entry price. But when I place order, I may get a order fill at 42,880. So that 5 rupees is the slippage. So typically from my experience, current bank nifty price is 40,000. So if I assume 10 points slippage for buy and sell, then 10 points out of 40,000 is um, 0.03%. So that's what I will assume here. So if I consider that slippage, then you can see actual returns are actually negative. So we don't make any money after considering slippage and the charges. So this is the actual scenario when we go live. So even though backtests are good when we go to live trading, it may not always give money because of these two reasons. One is slippage, another one is charges. So after considering all of them, now you can see equity curve is like pretty like going up, down, and we can see there are many loss-making years in the current scenario. And most of the YouTubers may show you single year data and show that, let's say this particular year if they're showing, then they may tell that it is a very profitable strategy, but in reality it is not. So the conclusion is that I will not trade this strategy. So our 4 lakhs at the end of 9 years may become 3 lakh 47,000, which we don't want to do that. So the conclusion is that don't trade the strategy simply based on few months or 1 year backtesting. You have to backtest over the many years, and you have to consider slippage and then charges as well. Then only we get a realistic picture. So that's all for today's video. Before closing this video, I want to show you one of the example of the backtest. So for example, 28th April 2023. So if I go to 28th April, so this is the 28th April data. So this is high and this is low. At around 9:30, it broken the low of the first candle. So that is where our sell executed. If I go back to Excel, we can see our trade is short and our entry time is 9:37. So since I am doing on a 1 minute level data, I know exactly when I am buying this or selling this 9:37, and price is 42,875.7. If I go to this candle, you can see the low of the candle is 42,875.7, 42,875.7, and then at 2:47 we exited a trade at 43,081. So the high is 43,081, and you can see at 2:45 candle we exited it, and the time is 2:47. And in this case, the SL range is 205 points. I mean, the difference between high and low is 205 points. And basically, we made a loss of 205 points, and with 25 quantity, it becomes 5467. So we made a loss of 5,467 rupees. After considering charges, it will be 5,696. So that's it. If you want this Excel file, you can reach out to me. Thank you for watching. So I'll upload more videos in future in this channel. Please like, share and subscribe. Thank you.